Hi everybody. How you doing? It's your buddy Uncle Bruce here. Stock Markets with Bruce. Welcome to the Tuesday morning show, August the 31st, 2021. Our last day in August. 8 months gone in the year already. Only 4 months to go. We have Labor Day coming, Thanksgiving coming, Christmas coming, Halloween coming. I mean, geez, unbelievable. Remembrance Day in Canada coming. My God, we have got stuff happening in the next 120 days. I mean, whoa. And Jen and I are becoming nomads in the next 2 weeks. Oh, my goodness gracious. I'm just thinking about all the different locations I'm going to be at doing this show for you guys, just all over the place. This is going to be kind of fun. I'm rather looking forward to it. Welcome one, welcome all to the channel where we like to talk about what's happening in the stock markets in plain English, if that's at all possible, with all the fancy terms coming out now from everybody. Did we ever figure out the catalyst for GameStop? I'm not complaining, but I'm trying to figure out my next move. Yeah, GameStop. Everyone has their opinion on what they think is causing it. A lot of folks are thinking earnings time. They're always around the earnings. There's a rush. There's a move. Okay, if that's going to happen, okay, great. Let's see, what it's got. The last time we had earnings 3 months ago, we saw the shares, reach 330. I remember I was yelling for 346 a share. We never got it. It didn't last long up there. A lot of you were thinking, this is it. We're at 330 and we're going to the 1,000 now. And it didn't happen. A lot of you did not write call options for 350, 400, 500, 600. You didn't write them, and you watched it come back, and it came up, and it went back, and it went right back to 150. Is this the one? Is this it? Is this the moment that the GameStop shares will because the earnings coming out next Wednesday, between now and then, are we going to have a run here to this 260, 280, 300 range? And what? I don't know. Can we even reach what we had last time? I don't know. I don't see it. I don't see it happening. I don't see the volume happening that we need to have to run this market. 157,000 traded so far in 5 minutes, which is fine, but that's the opening salvo. That's typical. If this were really taking off with unbelievable interest, we'd be at a couple million right now. We're not. So I don't know. I mean, there's interest in the stock. Yeah, there is. But it's not unreserved interest. It seems to be cautious interest. And so, yeah, it's up. It's up 479, and I'm not complaining. But I also wonder, what's going on? Is this being led by AMC? That's the other question. It's AMC 44.91, up $1.58. Is that the leader and GameStop's the follower? GameStop doesn't have financials coming out next week. GameStop does, not AMC. AMC has no financials coming out next week. So, what is the deal here? What's really driving what? I'm happier at 213 than 155. I'll tell you that. I'm happier here than at 165, 175. I'm happier here for all of you because you're all richer by 40, 50 bucks a share in the last 2 weeks. This is great. The question is staying power, and the question is follow through from here. As we know, this stock can go up 50 bucks from here or go back 50 bucks from here, and it'll hang around a while at each level. Or stay right here. We'll see what gives. We'll watch it. I haven't had time to take your courses yet, but I have a question about time decay, I guess. My Matterport January 15 calls are in the money, but are still negative. How or what should I expect with this? Well, the share, you probably, when you bought the contracts, there was a higher premium at the moment because of more time available at the time, plus the options that just come out, there's probably a lot of demand for them. Now things are settling in. From here on forward, the movement of the stock is going to dictate your profit or loss from here. 614 a share is great to see, but I wouldn't be surprised in the very near future, whether it's today, this week, next week, we're going to see 18 to 20. We're going to see 18 to 20 very soon on Matterport because there's no selling coming in. There's nothing coming in. It's just not coming at us. And the ability of the stock to go up a couple more dollars here to 18 to 20 is very doable. That's going to put you $3 to $5 in the money on your contract plus premium. The other thing is, if the shares keep accelerating in price, the premiums will start rising again on your contracts. More players will be coming in to buy the 15s to get into this market, to get into this stock. They want the time, January. They're going to want the in-the-money value, 15, and they're going to bid up your contract. So it's just going to get better for you. So it's better holding cash and buying puts, or buying stock and selling covered calls for passive income or long-term bullish position. I think what you mean is holding cash and writing puts. I think that's what you should be saying. It's holding cash and selling puts, writing puts, because you're looking at a bullish position. Or buying stock and selling covered calls for passive income on long-term bullish positions. There you go. Well, if the stock is a dividend-paying stock, then you buy the stock and you write calls against the stock, out of the money, short-term calls against the stock. You take your dividend income, you take your option income, and say thank you very much. If the company is like a SoFi, you could write put contracts on SoFi, maybe 3 months out, 6 months out, maybe at the money or slightly in the money. Maybe you would write 15s or 1750s or even 20s. You write $20 SoFis if there's a premium in there. In other words, you can't just get $6 a contract and expect to pay $14 a share when it's trading at $14.12. You got to get $7 of premium so that you're only paying $13 a share, or you maybe get $7.50 of premium. Got to make it worth your while. Now, if you sell a put contract for $7.50 at $20 for however many months forward, the strategy is that if the shares go up in price, say they go to $17.50, your contract that you wrote at 20 is only in the money $2.50 plus time value. Now, it might be a $4.50 contract, but you wrote it for $7.50 or $8. So now you're ahead $3 a contract, $300 a contract in profit, having the stock go up. So you're gaining value as it goes higher. Now, if the contracts are going to expire in 3 or 4 or 5 months, and the shares do reach $17.50, and you wrote them for $7.50, if they go to $17.50 a share, they're only worth $2.50 book value, and they'll start trading around $2.50 to $3 each. Therefore, giving you a gain on the value of the stock and a gain on the time depreciation as these puts time out. That's the upside for you. That's why you either write 20s or 1750s or 15s. If you can write a 15 and bring in a $3 premium, you're committing to buy the stock at 12. And it only has a book value here of 94 cents. The rest is time. That's what you want to earn. You want to earn that $2.94 time shrinkage as the shares break 50. They go to $15, $16, $17. Those contracts will be worth $0. You can keep all the money for the contract. Thank you very much. Nice little game. Not bad from a $14 position to make, say, $3 a contract net to you. That's like having the stock go from $14 to $17, right? But if it just goes to $15.50, you can make the $3. You don't need it to go to 17 to make the $3. Hence why you want to look at that. Do these companies make big announcements like NFT, for example, during a financial call? Or would they do it in a separate announcement and just stick to the numbers? They could, in the same day that they announce the numbers, make a press release additional about this NFT. That could be a separate press release on the same day. Very much so. Companies like to release good news. And if the financials are good, if the numbers are higher per store than last year because everything was closed last year, how can it be high? How can it not be higher? It's higher than 2019, perhaps. The company's growing on a per store basis. E-commerce is growing dramatically. They're going to come out with something on the financials. Let's hope it's really good stuff. Then they come out with, oh, by the way, we're launching our NFT website as well. It starts September 1 or it starts on October 1 or whatever it is. Um, that could add fuel to the fire. Yes, it could. I don't know if they will, and I don't know if it'll happen. But yeah, there you go. There you go. Okay. What's crazy to me is the high volume. GameStop. What's crazy to me is the high volume on the $450 and $680 calls, 10 times more than the others. I also noticed the same volume high on 300s, 350s, 4s, and 450s. Why would that be the ones they pick off? Right. Again, there are gamblers out there who are saying, if this stock were to really take off to 600 a share and 700 a share and 800 a share, then, buying 3s and 350s, 400s, 450s are a good move because, you're way in the money. But what they want to do is they want to buy these way out of the money contracts for very little money per to get a big volume of stock. They can buy 100 contracts for cheap money per contract or 1,000. They're trying to throw 5 or 10 grand into a pot to gamble. And if they can throw 5 or 10,000 bucks and get their hands on 5,000 shares of leverage or 10,000 shares or 15,000 shares of leverage, that's what they're doing. The gamble is all 3, 5, 10, 15 grand. I mean, it's all on the table. It could be all disappeared into nothingness, but there are gamblers out there who have $250,000 and are prepared to throw 10 grand at this stuff. They're looking for the lottery, the big payoff. They're looking for the payoff. Will they get it? I don't know. That's the thing. What is the SoFi PayPal story and what would be the impact of the stock? I have been talking here this morning about the possibility of people coming into the platform business, trading business. And we know that PayPal yesterday had acknowledged publicly that they are now looking into setting up their own platform stock trading service. They've got a whole bunch of clients that they could probably convince to open up a platform trading thing inside PayPal. It'll be interesting to see how all this plays out. It might be for U.S. residents only to start. It might be eventually for Canadian residents through a Canadian PayPal thing. It might be European residents through a European thing. I don't know. But I'm guessing it'll start with American people only, American citizens only, for an American trading platform. And I've been speculating that they can do it themselves at the cost of millions of dollars and a couple of years of building it out, or they could buy an existing entity that's already doing it. And I have been speculating with SoFi now for weeks and months that SoFi could be a takeover target for not only PayPal, but anybody else. It could be a large online player that wants to get into banking, online banking. SoFi is this close to getting their bank charter now. They're about to nail this thing any day. That's going to add a 50% premium to SoFi shares instantly. And with that in hand, you acquire SoFi with a bank charter, with a stock trading platform. For PayPal, that might be irresistible. It might be the perfect time to jump on SoFi and take it from 22 to 50. And away we go. I don't know. I'm not saying it's going to happen. I'm not saying it's not. But I'm throwing it out there as a possibility that there are possibilities here for all kinds of stuff to go on here. And SoFi right now at 14.02, down 17 cents. This is a ridiculous price to be selling it at, but people are selling it. What can I say? There it is. That's all I'm going to say about that for now. I talked a lot about it this morning, though, if you want to watch a rerun. Thank you, everybody, for that. If you'd like to talk to me about a 1-hour session, you want to get together with me, send me an email through my email address, which is right here. It's the old school hotmail.com email address. Send me an email. Say, Bruce, I'd like to talk to you on a one-on-one session. When can you book me in? I'd like to make a reservation and lock it in right away.